And now we don't have anymore the support of US, so we're on our own. It's giving us some shadow of the past. The European Central Bank already need to do something. Germany was a superpower in Europe without any super arm. Who will pay for the pensioners in the coming 5, 10, 15, 20 years? Is it a new burden to defend ourselves against the potential aggressions of Russian troops? I think the crown jewel of Europe.
Welcome to Merill Talks. Today, we're joined by Marc El-Lazidi, fund manager of Merill Funds, with over 20 years of managerial experience from Geneva to London to Valletta. Welcome or welcome back. Make sure to check out our other videos, our LinkedIn, and even our website. Please note of our disclaimer at the end of the video. And now, let's delve into today's subject, which is the decoupling of EU's core real economy from its stock market trajectory. So, Marc, first of all, hello. Thank you.
Hi everyone.
Debt is rising in the Eurozone, Marc. At what point does this become unsustainable?
That's the question at the moment. I think, as we know, the president of the commissions, Miss Ursula, she made a statement not long time ago, 800 billions will be spent on defense. It's quite a hard wake up. I think, as we know, Trump is pushing in this direction. It's maybe the right moment to think we should be not anymore in infant phase, I will say. It's maybe time for Europe in the way to wake up. Now the questions, we know there is a lot of problem in the core of Europe, talking about Germany, talking about elections not long time ago. And France also struggling big time here. So the core of Europe has problem. And France, as we know, is above 100. I'm talking about, I will say maybe on the screen, debt to GDP above 100. It's not a good sign. As we know, normally on the Eurozone, it should be between 60 and 80. We know the good student here is Germany with around 60. But the bad students here are the South Zone. As we know, Italy is the number one, following by Spain and Portugal. So now all this question is the equations. The equation is how is the GDP growth? How the GDP growth will compensate this high level of debt in the South Zone. We discuss about it and we make a statement that Spain is probably one of our favorite countries, not only in the South Zone, but also in Europe, with a GDP growth, I will say, higher than US. As we remember, Scott Bessent, the new US Treasury Secretary of the Trump administration, 2.0 is targeting 3%. The last figure haven't been so good because we are below 3. It was around 2.4 for the Q4 of 2024. So now the question is, the growth, is it present or not? Now, knowing the European president of the Commission say 800 billions, is it a new burden or it will bring, I will say, helping our effort to defend ourselves against the potential aggressions of Russian troops? This is exactly what Poland did already, putting a lot of emphasis on his new army. By the way, Poland is an interesting thing because they try to match the number of tanks the front has in his at his level. So I think it's a very big question here. But maybe let's think about it. And I think we need to show also the growth trajectory. And I think one of the outstanding one is Spain. And we are very, I will say, positive on Spain for a long time. Now, is it sustainable? We think it's a structural trend for Spain. That's definitely the case here. Now, for the other country, that's the big question here. We think Europe on this core, the way we grow up, I'm old enough to remember, like I always say, Helmut Kohl on one side, François Mitterrand on the other side, building up. In Europe, we are standing now. But after that, a lot of problem between France and Germany. Dialogue was not present. And now the question is, do we need France and Germany going forward? The South Zone, I'm talking about here not only Spain, but we're talking about Portugal, Greece, and even Italy, who's doing like a lot of effort, even if the debt is quite high, and also for Greece. But these countries who used to be the bad guys back 2011, and when Jean-Claude Trichet was the chairman of the ECB and pointed out when we say that the Eurozone was not going well at that time, 2011, now we're in 2025, and it seems like these countries could save Europe.
And in fact, now that you mentioned them, Spain and Portugal, what are they doing right?
First of all, like we said in a previous video, first, the immigrations. I mean, it's a big term here, especially in France, also in Germany. But the immigrations, the integrations of the immigrants in the economy, I think Spain is doing a good job at that side. You will tell me, yes, the immigrants are coming from South America, so they are part of the same cultures. It's helping. But I think we can see also some light at the end of the tunnel. And immigrant force is making a big push in Spain. And we know one of the main issues here in Europe is the demographic. The demographic is terrible, especially in Germany. It's clearly a problem here because the workforce, who will pay for the pensioners in the coming 5, 10, 15, 20 years? That's really an issue. And if we don't have a young workforce, it could be clearly a problem. So we could go in the direction of Japan, but Japan, as you know, has 250 debt to GDP, which is quite high, and had a problem with for 30 years with its growth. Now, as you know, we also like Japan. It's going on the other side, and we think Japan's showing some growth, also very active on the semiconductors.
So, Mark, on Europe,
Mhm.
and also tying in the defense and military side of it, could military spending actually bolster Europe in a situation like this?
It's an interesting question from you, Mike. I mean, it's an interesting question because you remember months ago, Draghi was saying Europe is missing a boost, and it was like pointing more like on the fintech startup, on the innovation side. But the boost, it's an interesting thing, could come from the war effort. And on that side, if you see the trajectory of Russia, how resilient it was during the war, if you see the GDP growth there, which is like above 4%, it's just because the military complex. Now we could ask questions on that side. And if you see also the trajectory of some stocks in the defense side from France, as you know, probably know, France is one of the second, I will say, if I'm right, exporter of weapons after US. So it's an impressive thing. Especially, I would say, war in Ukraine was also more like a showroom for many weapons, the Rafales and also the tanks and etc. So yes, it can bring something. Now, are we ready for it? That's the questions, because we will accelerate the burden. 800 billions, it's a lot of money. Knowing that technically NATO, we should put 2% of the GDP for weapons. So yes, it could help, but I think, are we ready for it? That's the questions. Did our generations and your generations are ready to make these efforts, putting a lot of money? Because we know that this is it giving us some shadow of the past, and we know we are not so far away from the Second World War, and it's also showing not so good things. I mean, in these questions, I feel that the Europeans, they feel quite alone at the moment after what Trump said, or his administration, and especially his vice president, Vance, who was not long time ago here in Europe and questioning a lot of things. So again, it will favor definitely European defense. I mean, for France, it's a very good sign, I will say. For Germany also, that's for sure, and Italy too. But shall we build up our new Europe based on the effort? Especially what is interesting with Europe is the biggest free zone in the world. And we need to keep these cohesions alive. This is very important here. But like I say, for a long time, Germany was a superpower in Europe without any super army. So Merkel was always consensual, but she was building up an economy for the last 20 years in Germany without putting military in the front, always trying to find a consensus, the same way she was managing his consensus from the political side. So yes, we need to do something in these directions. Now, are we ready? That's the big question here.
Do you think, though, that Europe needs its own independent strategy, or is it that NATO will be enough in the long run?
For a long time, as you know, I'm the advocate, I will say Europe need to be on its own without counting on the NATO. This is a long time. So far, like I said before, France was the only army, and UK, obviously, UK is quite a strong army too, but UK is not anymore. Except that probably the prime minister is doing a lot of in the directions. He's quite active at the moment. He's backing up Macron. He went also directly to speak to Trump. So I think he's playing, I know the economy in the UK is not in good shape, but from a foreign aspect, I think he's playing a very good role, trying to put US at the bay in the way, but also putting the European defense, because it was one of his first move when he arrived in power, the new prime minister of UK, to say in the directions of Europe and helping on that side. So we are going in the right directions. And I think also the good sign are also coming from Poland, like I say. They are in the far front. They are not far away from Russia, and they are making effort. And like I say, Russia has been resilient. Now, shall we go in I would say, the business model of Russia with industrial complex, etc.? We shouldn't go, but the things, it's for sure, we need to defend our free zone. And this free zone shouldn't crack, that's for sure. If you remember back 2020, the COVID, when Germany was fighting against Italy for the mask, we shouldn't go in this direction. We should go and work together to build up an army and a European army. What France and Germany fell years ago, I think it's going in the right directions. And I will say Poland is going in these directions. The growth, the economic growth of the South Zone also answering the things. I think we will see in the coming years a different Europe that we could imagine when France and Germany has been like the rock, the stone here, but maybe not anymore. So now it's expanding, and I think we're expanding in the north with Poland. I think a lot of tractions, good economy there, and also the south zone against Greece, Italy, Spain, going to be the tractions of this new Europe.
And in fact, Mark, you mentioned Russia. And also on this military subject, Russia has been filled with sanctions, but they seem to be holding up quite well. Why is this the case?
The case is the natural resource. That's the big issue we have, the natural resource. And you remember when the war started, it was a mega issue, I will say, for Germany, because now, and as you know, one of our favorite country, which is Norway, the gas is coming from Norway. So we are, as you know, we are very positive on Spain, as you know, if you have been following us for some times. Also, the Norwegian economy is also fantastic. So we need to make a big effort on these directions to be more independent on that side. And I think that's why, for example, the nuclear was one of the big questions. And if we think about in the 70s, when the first crisis, the oil crisis came, France was pushing maybe a little bit too much in the nuclear directions, when on the other side, Germany went in the other side of the spectrums because the Green Party was pushing. So now they don't have any more nuclear plant. Probably not the good things to do. So again, I think we need to go in this direction. So a lot of efforts need to be made on the defense side, but also on the nuclear side, I would say, on renewable energy, which is already the case. And if you remember, we spoke about highly about Spain, who's been really for the past 15, 20 years pushing big time on the renewable infrastructure.
Understood. And I mean, getting back to Russia, and considering that we've discussed it, and I'd also like to see what you think about this. Does Russia's resilience in any way, shape, or form affect Europe's military and economic strategy?
Yes, of course. I mean, this Russian economy was more resilient than we expected because the sanction, etc., etc. And I mean, side by side, Biden administrations went hard on the sanction side by side with the European Unions. But now Russia is still around. So, and still, I mean, of course, the army. I mean, what we can say, probably US will offer a political, how to say, probably Russia lost the war from a military aspect, but won the war from a political aspect, which is probably something good, I will say. So let's see. We need to find an exit to this war. There is no problem. It's for sure. I think now Trump is pushing too much on these directions, but that's the question here.
And do you think it's within Europe's interests for a peace deal to actually go through?
It is. We don't have any other issue. I mean, there is no other issue. No, it will boost innovations. It will boost defense spending. It will, I hope, also boost on how energy independent we can be. I think we need to defend this free zone, the biggest free zone in the world. We need to defend also different cultures from the north to the south of Europe. I think it's very important. And now we don't have anymore the support of US, so we are on our own. So clearly here, it will defend something. But again, we need to be ready for that. Are we ready? That's the question.
Marc, I want to jump onto, actually, now that we're on the subject, maybe a bit away from the military side and more into European companies, and specifically European banks. With all of this going on, with all the uncertainty, what do you think about European banks at the moment?
Mike, the cyclical banks did a fantastic trajectory. I mean, they've been suffering for many years, the European banks, bad loans, etc., and we know. And it's interesting to see also the trajectory of the South Zone. And as we know, we are a big fan of Spain, as we know, but the Spanish bank, fantastic trajectory. They are the partner also, they are very close to South American countries, so also they are pushing in these directions. So I think it's good also to see a few charts on the screen here of Santander, BBVA doing fantastically well and even doing better than their counterpart in US. And it's at the beginning of the years, we could imagine it's a contrarian bet because we can imagine US coming, Trump 2.0, but it's been very resilient and probably even they are cyclical, they start to continue the trajectory here. Especially we can expect the rate to be cut by the ECB. I mean, that's the things the central bank, the European Central Bank already need to do something. I mean, we see already the Central Bank of Sweden and Switzerland cutting the rate as the economy is not in good shape, showing, of course, sign of recessions, which is already the case of Germany. But in the South Zone, the growth is still around, which is, again, it's putting the things in perspective and putting the light in the direction of the South Zone. So clearly here, the banks are doing a good trajectory. And it's interesting because if you think about the stock market, we have a domestic story and we have also internationals and global story here.
Another question related to companies, actually. Defense companies in Europe, Marc, they're thriving. What's going on?
I mean, this is what I say about Germany. For many years, Germany had a beautiful BMW. You can state of the art of the BMW, but the Leopard, which is Rheinmetall, who's producing the Leopard 2, was not in good shape. I mean, the German economy was in good shape, but the German army was not in good shape. Not enough funding, and etc. etc. So yes, of course, if you see around Europe, a lot of militaries doing well, Leonardo, etc. Just on that side, we are talking about this. There is no recommendation here, and we are, as you know, Article 8 ESG, so we cannot integrate this kind of company here. So we try to be quite objective here, because we cannot integrate this type of company, but of course they're booming. Now, obviously, we will find some company who are different than that side, and I think we can think about this. So I think for sure, if you see the trajectory of these stocks of the military, but I think we can think about something else, and I'm thinking about the infrastructures, renewables, and I think it's also quite a positive sign here on that side.
If I had to ask you to choose two stocks to represent Europe as a whole, not at all as financial advice or anything of the sort, but as what you think.
I think the crown jewel of Europe, it's ASML, of course, in the semiconductors. That's for sure. We have also Novo Nordisk, who was the most advanced, I will say, on its drugs and lost. I mean, the problem is now with Biden, we are very cautious on the healthcare and the pharma at the moment because it will probably reduce. We are concerned about this, but I would say before Trump 2.0, Novo Nordisk, as you know, and especially we did a lot of video on this, and I will say ASML. Now, I will say the new configurations here. I will say ASML for sure is remaining a leader here. This is the crown jewel of Europe, but I think the banks are doing quite well, and I will say on that side, another one, it's the luxury goods. The luxury goods, we can still sell to the foreigners, I will say outside of EU, the art de vivre in France, the art de vivre in Italy. I think a lot of tourists are coming and they want to experience, and we see here, for example, in Malta, the experience, we see the number of tourists coming even through winter. It's unbelievable, non-stop, non-stop, non-stop. So again, people want to go to Greece, people want to go to Portugal, people want to go to Spain, people want to go to Malta. And this is what the South Zone, it's one of the major catalysts of the economy here. When Germany, unfortunately, doesn't have this kind of attraction, except maybe Berlin, because it's a fantastic capital, I will say. But that's clearly here. So I will say luxury goods, Hermes, Louis Vuitton. Kering, I'm putting Kering on the side because suffering a massive loss at the moment. But a lot of people, I will say the tier one, Hermes producing tier one products. When Louis Vuitton, it's more, I'll say, I will classify more on the tier two. So clearly here, Europe have a lot of things to say and a lot of things to show on the luxury goods. So one side, domestic story with the banks, and on the other side, luxury goods with Hermes, Louis Vuitton, etc., etc.
And are European investors too focused on the traditional types of companies? Are there new opportunities that they're missing?
I think in European investors are quite sticky. That's why I say, but we will discuss in another video. If you think now retail is driving US, retail is not driving Europe. It's still like the insurers, the banks who are playing the thing. So we can see also a lot of stability on the stock market here in Europe, probably because institutional investors are backing up the things. Is it good or bad? It's just like the configuration of the market, the structure of the market. When you see at the moment the volatility we are facing in US, it's unbelievable. Huh? On the intraday, unbelievable, clearly unbelievable, because the options markets, the gamma, are driving the market and also the retail investors. So it's a positive thing. So that's why I think Europe at the moment, it's quite positive on the stock market side when US not so good. So it's a very interesting bet. Like, for example, China was a contrarian bet, but we will discuss in another video because it's, I think, a very interesting things to talk about.
And on that, Mark, tomorrow a recession hits.
Mhm.
Hits Europe and it hits it hard. What industries do you believe are best suited to come out of that recession stronger?
That's a big question here. I mean, of course, in general, you put on the utilities. Utilities, it's a bet. It's like having a long-term bet on the rate. So it's a question of duration here. We are very, very cautious on the duration side. I think a lot of fixed income funds have been hit since 2022 because they have been wrong. They have been predicting a recessions, which was not the case. Us, we are really managing in an active way our durations. You can, if you see on our funds, no recommendation here. But I think utilities could be the base and consumer staple. Of course, we need to be cautious on the consumer discretionary, but I would say tech, it's not anymore cyclical. They are here to stay. So clearly here, the investors, again, they are favoring maybe more European tech over US tech, who are on the other side. I think if recessions will be hit Europe, we need to be, I will say, very cautious. And I will come back to you to say, because this market is so volatile that I don't want, you know me, I don't like to predict things, but we are really having strong things. And I think what is important, especially for our audience, we try to segregate tactical and strategic. So, and we could have any even contradictions. We can have a strategic view, and on the tactical side, it could be not the right moment. I give you the example because we discussed ASML. Like, ASML was quite expensive, reaching not long time ago 800s. Now we are breaking the 700, so it could be an interesting thing. So again, you need to be probably on the chip makers for sure from a strategic perspective. Now from a tactical perspective, that's a big question. It's too expensive. I mean, all the investors of NVIDIA have been suffering these kind of things because for sure NVIDIA, it's something to do. And that's the point.
Well, great, Mark. I thank you very much, as usual. Thank you.
Thank you very much, Mike.
And I hope everybody that is watching enjoyed this conversation. I think it was very insightful indeed, a lot to happen and a lot discussed. I do ask that you obviously follow us on LinkedIn, visit our website if you're interested for more information. And yeah, we hope to see you at the next discussion where Mark will cover something else vastly interesting, and we look forward to it. Great. Thank you.
Thank you very much.